Hello and thanks for joining us. My guests today are Katie Knight, a Community Engagement Officer at Apple FCU, and Victor Hoskins, CEO of the Fairfax Economic Development Authority. Thank you both for joining us. We're going to get into financial literacy and kids, but first of all, set the stage for us. Explain to us what the Fairfax Economic Development Authority is and does.
So the Fairfax Economic Development Authority is like many around the country. Believe it or not, there are many organizations like ours around the country, and our job is to help build the economy. So we work with small businesses to help them grow. We work with big businesses to help them get strategic partners, and we work with them to actually get talent for their company.
So it sounds like you would need talented young people to become talented adults.
Absolutely.
So why exactly do businesses need kids who become financially responsible adults?
Well, one of the things that we all know this, our first job, especially paid job, is the one I think that's the one I remember the most. When I got a W-2, I was like, wow, this is fantastic. Yeah. And actually got a check in those days. Now you get a credit now. But actually understanding what to do with that money, how that money plays into your life overall, you really have to understand that. The sad thing is you run into people who don't have financial literacy and they have a great income, but they don't have a great personal economy. It's because they've never learned how to really have appropriate debt. And these things are really extraordinarily important because actually that's how our companies get built, by really smart people that have their financial act together and their teams.
So what sort of specific things do you think kids should be prepped on?
First, they need to be prepped on what it's like to work and going to work every day, showing up on time, dressing appropriately, but really basic math, just understanding, what money is, how you work with money, how you use credit appropriately. Like a lot of people early on in their careers, they want to buy a really nice car. Well, that's really not the time to buy a really nice car. That comes really a lot later. It's basic transportation. Understanding how transportation costs, housing, and these things all play into your lifestyle. Because you can go out to dinner every night. Oh, excuse me, just order Grubhub. Yeah, right. I have a nephew. I got to tell you.
Sent to your door.
Oh my God, when I found out what he was paying for Grubhub each month,
it gets expensive.
I told him, I said, listen, I can't help you until you fix that. Yeah. But these are the things that you need just to run your lives.
So what does your group do specifically in furtherance of this goal?
Yeah, so one of the things that we do that's very different from a lot of economic development organizations like ours is we work with the Fairfax County Public Schools. We are in 7 public schools, and what we do is we actually take to them businesses. For example, Microsoft is my favorite one because they really mesmerize these kids. They usually send 5 or 6 people. They talk about what they do in the company, different roles. But this is to help kids see other jobs. Because what happens is a lot of kids only see the job that their parent is doing or their uncle does or a neighbor. This gives them a broader view. And really what we want to do is inspire them to pursue careers that are in their local economy and hopefully stay there. But we do this with construction companies, we do this with engineering companies, and it's really a fantastic thing that we do showcase in these companies.
Yeah, you had mentioned before the importance of getting people to stay in the area. Can you talk more about that?
Yeah, well, there's a big investment made by the county and by all the taxpayers of the county for a great education. A lot of people do not know this, but we have one of the finest educational systems in the nation, hands down. We have high schools like Thomas Jefferson High School that's actually, nationally famous. I mean, we grow incredible talent here. That's very costly. That's a big investment. We want that investment to come back. We want that investment to stay. And we've been very fortunate that some of that investment has come back and run organizations here in Fairfax.
Are you the investment?
I guess so. Yeah, Victor and I were talking.
To?
I actually was born in Fairfax County, educated in Fairfax County, and did come back to Fairfax County after a brief international stint. But I think what Victor's talking about is exposure, right? That what the Economic Development Authority is doing, which is different from a lot of other economic development authorities, is working with the school districts to expose kids to other opportunities they might not see. And that's so important because then it preps them for work. And if we're tying it back to financial readiness for kids, I read that the average American car payment is upwards of $700 a month, right? And that's not necessarily the fancy car that you were talking about. And so if they don't have that exposure to financial wellness early on through school, through parents, through community banks and credit unions like Apple, they're going to be really surprised when that paycheck comes and taxes are coming out of it and Social Security is coming out of it, and how do I make this $700 car payment? Right?
Yeah.
Yeah.
Well, it can't all fall to your organization, though, to do this. What do you think parents, schools, other stakeholders need to do to partner with you to set you guys up for success?
Well, I will be absolutely honest with you. I think that parents helping kids establish a bank account early on when they're very, very young. Yes, kids get allowances. Teaching them how to manage that allowance. Manage that allowance just like with a small budget. It's not a lot of money, but do you spend it all when you get it? In my household, it was allowance for chores. My daughter did not get an allowance unless she did her chores. She did her chores, and we sat down with her and they said, look, she was 9 years old. We said, you need an account for college, you need an account for a car. You need those two accounts. We're going to take you to the bank to establish those. And every week, she would set aside money, and once a month we would take her to the bank and she'd put that money into those accounts. What that taught her was that you don't spend everything you earn, because it's not what you earn, it's what you keep that counts. That's really how you build your future, by what you keep. So just basic financial literacy is powerful. And if they have the acumen, also teach them about what investments long term, how they work. When my daughter was a teenager, I started talking to her about mutual funds. When she turned like 14, I said, we ought to think about getting you in a mutual fund. Let me explain to you what that is. And that kind of dynamic is something that paid off for her long term. And this is what you have to do. You have to make them realize there's an educational cost to pay, there's a transportation cost to pay, and in the future there are other ways that you're going to have to take care of yourself through retirement, and that's through long-term investment.
Yeah, you got to make it tangible and you got to make it safe too, right? So as a parent of young kids who are younger than yours, probably,
Yes.
Victor, we're paying allowance, but it happens electronically, right? And so rather than physically going to the bank, what the kids are doing is checking out the mobile app that happens to be Apple Federal Credit Union. And we've renamed it, right? So it says Jasper's Money and Josie's Money, and they're asking weekly to see where their finances are at. And I will tell you that young son is a spender and young daughter is a saver. It's really interesting how quickly you can see that develop. But I think that coupling your financial literacy with products and services that are safe for kids, and as they get to a place to say have credit, doing that where the guardrails are up is really important as well.
It sounds like both of you are saying, don't just preach to the kids, give them firsthand experience. Is that right?
Absolutely, absolutely. And I saw this play out as my daughter went to college. It's interesting, that's right, they don't go to banks anymore.
No, sometimes they do, sometimes, but
so
not
amazing.
so much anymore.
That's so amazing. So, but when my daughter was about to go to college, I remember talking to her, and she wanted to go to the schools that we had gone to. We were first generation, so we went on scholarships. And we told her basically, look, we will pay for your education, but it needs to be reasonable. And we made her a deal. We said, look, you're in the state of Maryland, we'll pay for a full ride to the state of Maryland, any school. You go out of the state, you pay the difference. And when my daughter got in these colleges, she looked at the difference. She goes, I'll be more than happy to go to school in the state of Maryland.
Maryland's got some really great schools, Dad.
Yeah.
But that kind of, making them aware, because what she was thinking of is long term. What I want to go to graduate school, that's addition on top of this. So I think that all these dynamics help them think more future oriented, future goals, and those goals as they relate to finance, but also to their lives.
Well, yeah, and we're talking about kids entering the workforce and what Fairfax has to offer. I think in additional, you're talking about awareness and your daughter realizing that maybe Maryland would be a fine place to go to school. There's some organizations in Fairfax that have phenomenal benefits that maybe they don't know about, excellent work cultures that maybe they don't know about, and so it may make that YouTube career seem a little bit less appealing, where they're out there on their own trying to figure out health insurance, when an organization here in Fairfax might be able to take care of them better.
Exactly. So, we try to, in these showcases, we try to not just demonstrate all these different careers at any particular company, but also the next phase is to get them into internships, which is the part where they actually get to practice in the workplace, getting prepared for work, going to and from work, and hopefully a paid internship where there's actually a little bit of income. But I think that all of these things really prepares them for life. The real core of this, though, is we want them to be inspired for a career. We want them to see something like we work with some of these companies like Bloomcatch, which is a really entrepreneurial company. They and that what Bloomcatch does is it teaches them how to create a business plan.
Right.
So it's teaching them entrepreneurship. But each of these companies has something to offer. But our desire is once they go through that inspiration, that they actually find a company that they might want to go to and intern.
Obviously, every sort of career could use young adults who were financially responsible as kids, but could you give us some examples of specific fields where you could really excel if you get a good financial footing first?
Yes, accounting.
That makes sense.
Chief financial officer, real estate analyst, real estate developer. Actually, and if you're interested in bio these days, nice, strong quantitative skills are important. But actually, there's a business side to bio, the marketing side of bio, where they actually price things and get a profit yield. Well, if you have financial literacy, it's a very powerful tool to really expand and grow in those careers.
Did we say banking?
Oh, banking. I forgot.
Credit union, finance, that's right, yeah.
Yes, no, absolutely, finance. Actually, I got to be honest with you. Any kid that's in school right now, I don't care what field they're in, I encourage them to take one course in finance, even if it's just introduction to finance, because what it does, it gives you the fundamentals of how things work in our economy. We're a free market economy, so one of the places that you really have to understand the most is finance. And the difference between borrowing from a credit union versus borrowing from a bank versus getting an investment from private equity.
Sure.
Those are all three very different things, and they can do different things to your career in the long run.
Can you tell us more about other partnerships you've done with local businesses in this vein?
Sure. We've worked with Clark Construction, which has been fantastic because they have engineering, they have architecture, they have all these things that relate to ground up development that really kids find exciting, particularly if they have any interest in design, because particularly the architecture folks. Okay. And then Bowler, which is an engineering company, they do infrastructure. And infrastructure doesn't sound too exciting, but when you realize how telecommunications infrastructure or water or the basics of operating of a city play into it, and they show these large-scale projects, it's really exciting for the kids to see that. ICF, which is a consulting firm, and ICF really focuses on telling them that, look, in our business, it's analytical skills, it's writing skills, it's understanding how to interact with others. That's really what consulting's all about, listening and developing solutions to problems that they define. And all these companies really bring something fresh, I think, to the environment.
All right, Katie, tell us about the importance of getting kids educated when it comes to the realm of credit.
Massive importance. So credit credit score doesn't only impact our abilities to borrow, but oftentimes employers in our region are actually pulling credit to decide on a candidate, or a leasing office maybe pulling credit in order to decide on a current renter. And equipping kids with knowledge about how to build and maintain healthy credit habits is very important. Something that you can do annually is pull your own credit report at annualcreditreport.com free of charge. And having this knowledge helps you increase your borrowing power, but also how attractive you are to future employers.
Are there any other financial instruments, terms, things like that kids need to be exposed to?
So I think that our public school systems are doing a good job educating them, but there's lots of resources that they can use. In addition to conversations with their own parents, they could come to Apple FCU's website and go to the Learning Center. We have many videos, blogs, articles about how a credit score is built and what factors weigh in. And it really is incredible, if you're doing this thoughtfully, how easy it is to play the game of credit.
And where do parents start for that?
applefcu.org.
Very good. How do you make the leap from, parents teaching these good lessons to kids, to schools teaching these good lessons to kids, to making sure you apply it as a young adult in the workforce? How do you continue that trajectory, do you think?
Well, I think most parents like us sitting up here, when your kids are young, you just want to keep it appropriate. And as you see their interests grow, you feed that interest. You encourage them to take certain classes. I really, like I said, encourage my own daughter to take a lot of math because at that time, there weren't a lot of women in math. And my wife went to MIT, so she had a very strong math background. And I said, clearly you can do math. I mean, there's nothing else.
Sounds like it.
So we really focused on getting her that skill set that we knew was unconventional, but would help her career progress. And I think that's what you do. You feed that desire. And if you can get them an internship in schools and get them in the classes that they seem to really, flourish in, I think that's really the biggest thing that you can do for them.
Well, and I think what you're talking about is creating a muscle memory for strategic thinking and goal setting in all of these cases. And that feeds right into personal finance and budgeting and weighing wants versus needs and identifying how to leverage something like credit when you're of age and what is the difference between an interest rate over here versus over there. So
interest rates.
So do you think that the people that you've come across who are lacking in these skills, is there like a remedial way to get them up to speed as young adults, or is it too late by then?
Well, no, it's never too late. First
Okay.
of all, it's never too late. I've worked with people in their 60s, and I've worked with people that are 15 years old. So it's never too late. I think that really breaking down some of the basic principles of budgeting. What is a budget? Why is a budget important? How does a budget relate to something you're about to do? To me, I think that really kind of defining that. No matter where they are in that scheme, whether they're coming out of college, whether they're coming out of high school, whether they're going into high school, all of these areas, if they can get that framework, then at least they know, okay, I get to this destination by doing these things. Because the strategy that you mentioned, a budget is really a strategy, and understanding that you're going to give up something now for something in the future, but knowing that budgeting is a critical part of that.
Is there anywhere that you think we're falling short from the Economic Development Authority's point of view? Are there benchmarks that you can't necessarily meet because you're not getting the talent or the education level in people that you need?
Well, the fortunate thing is in this region, we have 60 universities and they have about 400,000 enrolled and they graduate about 90,000 a year. So there is a powerful labor force in this region. 62% of the people in our region have BAs or better. And that educational attainment, we don't have the problems a lot of regions have. I haven't had anyone say they couldn't find enough people in finance. I've had people say we can't find enough people in quantum computing.
specific.
Right,
Yeah.
it's very exotic, but the reality is those are very powerful skills that are endemic. They're in our workforce. They're in our in almost everything that all the methods of our companies. Because we have a well-educated workforce.
Are there any resources that you guys offer?
Absolutely. So not only are we partnering with the school districts in many of the same ways that the Economic Development Authority is, but we push out information about budgeting, about increasing credit score, about the products and services we offer, in this case, young people, where we're keeping the guardrails up and creating an environment where it's safe to learn. But we've also got a learning center on our website where anybody could go and learn about increasing their financial literacy and being stronger in that regard, because it can happen at any age. It's really amazing when you have a clear goal and you've got the resources to get there, how quickly it can happen.
All right, so Katie, what are some takeaways for parents from today's discussion?
Yeah, I think we landed on about 3 main takeaways that parents can really come away with from our conversation today. And the first is absolutely establishing a checking account. At Apple, parents can help their kids by becoming joint on a checking account as early as the age of 12.
Why a checking account in particular when there's, all these apps and things out there?
Yeah, we talked a lot about how some kids are making money and spending money on different cash apps. And while that's a legitimate way for them to have a dog walking business, what's happening is they're spending money in a decentralized way. And so it's tough to have an awareness about where that money's going. If we're keeping that all centralized in a checking account, we're able to track it. And in Apple's app, you can actually visually see that through the budgeting tool in a really clear, concise way.
Okay, so checking account is set up, then what?
Well, building credit is next. Victor was talking about how that can actually impact your eligibility for a job. And we know that it impacts your ability to get a car loan, or perhaps lease an apartment. And you can do that before the age of 18 by helping your kid out as an authorized signer on a credit card, though that's going to be something for a parent and a child to balance as that kid is responsible enough and able to take it on.
Anything else you could do for kids to build credit?
Absolutely. At the age of 18, it's absolutely key for them to establish their own credit by getting a credit card. At Apple, we have a student credit card that's got a locked fixed interest rate lower than 10% and really low limits, so kids can practice credit skills in a really safe environment. 65% of our credit score is calculated by on-time payments and how much we owe. And if you've got a card like at Apple, you're really doing that in a way that makes it easy to have a good credit score.
Any final takeaway?
Well, get a job, John. Yeah.
I have one, thank you.
It's important, even if it's a part-time job, that kids experience some sort of a steady income to practice those budgeting skills, but also to practice the workforce skills that they're going to need for their future.
All right, I've got my 2 little kids and I've got my work cut out for me, apparently. So I look forward to applying these lessons. I would like to thank today's guests, Katie Knight, the Community Engagement Officer at Apple FCU, and Victor Hoskins, CEO of the Fairfax Economic Development Authority. I'm John Aaron. You've been watching the discussion, Raising Financially Responsible Kids, Equipping Kids for Financial and Workplace Success. For more on this discussion, visit WTOP.com and search Apple FCU.